earlier and it's transferred to the main head.
Good morning, everybody. This is Mark Lambert from the Thetis Pendulum Trading Group. It's January 24, 2012. It's approximately 10:30 in the morning, and I'm just going to produce this video real quick, show the indicator setup I was following this morning, just because it's going to be fresh in everybody's mind. You'll see how I use it intraday. Basically, I've given a little bit of an explanation on this in the past, but I'm going to bring it up again right now. This is the indicator setup. Advances and decliners on a New York Stock Exchange, plotted as candlesticks with the zero line, meaning zero means half the stocks are moving up and half the stocks are moving down. Right now we had a gap down this morning of around eight and a half points or so on the ESs. And why I was looking for a bottom at that particular time, at least a tradable bottom, as far as day trading standards go, is the fact that we're going to take a look at these right here, the ticks. The ticks is basically a setup of the aggregation of all the stocks moving at the same time on the New York Stock Exchange. They're either ticking down 1 penny or ticking up 1 penny. And I normally have the zero line, plus 1,000, negative 1,000. And usually when the market moves up and hits the plus or negative 1,000, that's usually an extreme bar. Usually there's going to be some type of short-term reaction. Doesn't necessarily mean it's going to be a change in trend, but there will be a reaction when something like that happens. Normally, say if I was still long at this point, if I saw an extreme bar hit 1,000, I would immediately close out my trade, figuring I got a good portion of the trade at that point in time. Got in long this morning, grabbed 3 points, saw the pullback, got back in, grabbed another point, and then just closed out the trade at that point. So, but as you can see, this morning we gapped down 8 points, and when you see something that gaps down 8 points on the open of the New York Stock Exchange, if you think that that is going to sustain and carry through, is this going to be a bearish day or not, you want to see these ticks. This is the opening tick right here at 9:30. Okay, you want to see these ticks hitting negative 1,000. If we're hitting negative 1,000, that means that bearish move, though we're down 8 points, is probably going to continue. We could go down 10 points, 12 points, 15 points, and just continue on through the day. But right off the bat, when the market opened up, you saw the ticks was not hitting the 1,000 line. As a matter of fact, the ticks formed a secondary high or low at 9:41 in the morning. And you would read this just the same way as you would read a stock chart or a futures chart. And once you saw the secondary high or low form on the ticks, it was 3 minutes later you saw the ESs finally double bottom in this configuration right here. This would have been the confirmation right around here, 9:42, 9:43, that we are going to start marching back up. But the advancers and decliners and also this right here confirmed ahead of time. So with that thought in mind, knowing that the market had gapped down, immediately, I must have posted probably half a dozen to a dozen times already this morning in the last 45 minutes. But immediately the first thoughts I had is this move is most likely not going to be sustained. We're down 8 points, but I think that's the bottom. And it got immediately confirmed. First, those thoughts came because we didn't hit a negative 1,000, so I was looking for a bottom to occur. Waited for this rotation to start to happen, and that's where I took my first long. And obviously, the thing was correct. We had been moving up, and then as we hit the top just a few moments ago, right here at around this level, one of the thoughts I had was, okay, this is going to be a short-term top, and we're probably going to pull back and consolidate some more. And the reason being is when you take a look at the advances and decliners, it started to make lower highs and lower lows. But the fact is, though, when you take a look at this, if you take a look at the range we're in, it was mostly positive, not negative. We broke the trend line, started to come back down a little bit, but still, most of the ticks were still ticking up from 0 to, plus 800 or so. So that's telling you that under the hood, I guess you could say, of the market, the internals of the market, there was still pressure building to the upside. And with that said, we came back down here, and then boom, now we just went up to a new high. And that's basically how I use these. And I use this in conjunction with fibs. I would normally like to see the market hit one of those extreme bars and the ticks turn at the same time as we hit a fib level, which occurred yesterday. Though I didn't trade yesterday, but when I did get back home from my little project, I saw that the tick started to actually turn. Probably it was several minutes before we hit this 261.8, which was the high of yesterday. And then from there, obviously, we just started to move down. And at that point in time yesterday, I actually sent out an email a little bit last night, but right after the market closed last night, by using the fibs, I expanded down immediately. And you can see as the market closed, this is right here at 4 o'clock. Bang, right here. Okay, this is the market close, occurred right at around this point in time. My first thing I did is I pulled a fib down like this, and I saw that the market ran right back up to the 19.1% fib, which is a fib that very few people know about, but it's very, very useful. It's usually like the earliest confirmation you can find using a fib level to be looking for a turn in the market. As you can see, the market overnight basically used these levels for support and resistance several times. You know, it's a 38.2, the 61.8. I was hoping to see it go down to like 13.01 this morning and hit the 100, but the market didn't give it that to us. So once I saw that roll over with the advances and decliners, that's it. That was my information to go long. So now the next point of resistance I would be looking at is as these advances and decliners continue to climb throughout the day. If they make it up to this high, you will probably get some type of reaction as we hit the zero line. So anyways, that's just the way to use the indicators. I believe I covered all the information I wanted to share on it. I'm just going to recap it real quick. You got a gap down or a gap up. Say if it was a gap up overnight, you want to see plus 1,000 consistently get hit. And that will mean that the people are still coming in and buying that gap up. If you don't see anything like that, then that means the market is probably going to fail quickly after. Just the same thing as the gap down. I want to see negative 1,000 being hit, which means people are still selling into that gap down, but it didn't. I mean, the extremes we were hitting was right around 800, and you could see it was consolidating sideways till finally it made this little rollover over here, and the market started to move back up. That was the first sign that you would have that we are going to get a bounce. And this is day trading, so as far as this bounce goes, I don't care where it goes tomorrow. I only wanted to know where it was going for the next 15 minutes that I'm in the trade, or the next 5 minutes that I'm in the trade. You know, once you grab 3-4 points, you got to lock those in, especially when you're day trading. And that's pretty much it. Just watch these indicators over the next few days, and you'll start to see how well they get ahead of the market. Sometimes 10-15 minutes ahead of time, you'll see a change starting to occur inside of the ticks. Then finally, you'll see it turning inside the advances and decliners, which is usually coinciding with the market bottoming or topping as far as the pivot goes for that day. So, and that's basically it. I hope you find this useful, and Godspeed to everybody.